Hey guys, I'm Mike Mruger. I'm here to help you incorporate your business. Let's go. Hi everyone, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group. Today I'm going to be walking you through how to incorporate a new business. Now there's a bunch of steps because you got to get tax IDs, set up bank accounts, you need bookkeeping systems to track revenue, expenses. There's all this stuff to get through the process, but there's an easy way to do this and a difficult way to do this. I'm going to break it down in the very easy path to getting your business up and running. And we're fortunate enough to have a group within our building that specializes in business formation, bookkeeping and accounting, and I'm going to bring in the head of that division, Tony Coppola, and he's going to give us some insight as to how he advises clients when they're setting up their business. He's going to give us some insight to the process and also some pitfalls to avoid that could slow down the process as you go along this path. Step number one of establishing a business is you have to figure out what is going to be the name of your business and also make sure there's not another business already that already has that name. So we're going to listen in and Tony's going to give us some guidance on this piece.
New York State has a business entity database where you can go on the Department of State and search the name of or the potential name that you want for your business. That's if you're doing it yourself. If you are contracting out a vendor to actually help you with organization, formation of the business entity, that should be their very first step. They ask you what the name is of the business that you want to form. They go ahead and do the search for you.
Yeah, and that's super important because we've actually seen some businesses even within the capital region here that they created a really successful company, and then all of a sudden they've got a lawsuit because they accidentally named their company the same thing, and then they lose the name, which was their identity. So don't overlook that step, kind of saying, making sure the name that you have or some variation is going to be there for you. Number two is, how are you going to structure the business? And what I mean by that is, are you going to be a sole proprietor? Are you going to be an S-Corp or an LLC or a partnership? There's all these different corporate structures out there, and you could be looking around the internet until you're blue in the face and still not have any idea as to which one is the right one for you. And it's really important because they have different tax implications, operational implications, liability implications to you as the business owner. So let's listen in to Tony's guidance on this piece.
Whenever you're discussing any formation, I would suggest that you involve a tax professional because there are different tax scenarios with each type of formation.
Okay.
The simplest of the formations would be the sole proprietor. There's no additional filing requirements except for, you file a Schedule C to report your income and expenses on your individual tax return. You do not have any liability protection with a sole prop, but generally the record keeping and the state filing requirements to register your business are less than that of an LLC, whether it be a single member LLC or a multi-member LLC. Single member LLCs still, you are not required to file a separate tax filing. That gets reported as well on your 1040, on your Schedule C. Once you get into the multi-member LLCs, then you have to file a separate partnership tax return. You need to file a partnership agreement that describes how you and your partner are distributing income or putting money into the business.
So it almost sounds like there's a progression. You may start your business, if it's something that's kind of, hey, I'm starting this on the side and it's just me, maybe start with a sole proprietor because it's more cost effective. There aren't a lot of moving parts, but once it really starts becoming a business and you want liability protection and all those other things, then you may start to consider single member LLC, or if you have partners, you'd have to be something other than a sole prop.
Correct.
And then as the business grows more and more, then does the LLC or partnership become an S-Corp because there's tax advantages, but the S-Corp kind of comes more into play usually when the company's making money and that's normally when companies transition over to an S-Corp, would you say?
Yeah, correct.
Yeah.
There's a requirement as an officer of an S corporation to pay yourself a wage. So sometimes that would potentially deter someone from making the move from a single member LLC or a multi-member LLC to filing that S election.
Step number 3 is you actually have to go through the legal process of setting up your business. And normally this means registering your business with the state, making sure you have the right license and permits, getting your federal tax ID for purposes of the IRS. There's all these additional steps that need to take place between by the time you've got the name of your business, you know you're going to incorporate. Now I actually have to get this thing established so I can start conducting business. And let's hear what Tony had to say about these items.
Yeah, your next step would be you need to register to do business within your state. There could be additional requirements with that, such as forming or filing publications with respective newspapers in that particular state. You then need to have articles of organization or incorporation, and then finally you need to file with the IRS to get your EIN number.
So while there's all these steps to setting up the business like tax IDs and articles of incorporation and registering with the state, there are entities out there that assist accounting firms with setting up these at a lower cost level so they can get the full package of services, right?
Correct, yeah, and those can generally be done in less than a week for under $1,000. You can have your entire entity set up. The process can be expedited, and you could be good to go, ready to go to the bank to open up your bank accounts and start your business.
So I call you on Monday, say, hey, I want to start a business. By the end of the week, I know what my structure is going to be, that the business is all set up, and then I'm off and running like with the business.
Correct, yeah. Your name's been approved. You have your tax identification in hand, articles of organization in hand, your New York State filing fees, or your state registration, in hand. You're able to go to the bank and open up your bank account to start the business.
Cool, good stuff. Number 4, once you have the entity established and you have your tax ID, you can go set up the business checking accounts that you're going to use to operate. Now, here is the big mistake that a lot of new entrepreneurs make. They just run all of the cash flow of the business, expenses and revenue, through their personal checking account. Don't do that. And it's a headache for a number of reasons that Tony's going to cover.
Well, for a sole proprietor, it makes record keeping a nightmare, especially when you go to your accountant at the end of the year to get your taxes filed. They will not be very happy if you hand them your personal bank statement and you are highlighting transactions that are relating to the business. It just makes record keeping so much cleaner when you have a separate business account as a sole prop or a single member LLC, and you're running everything relating to that business through that particular bank account.
Yeah. And one of the pros of that too, with not giving the accountants the headache, is when you have an accountant for the business and you bring them all those bank statements with all those highlighted transactions, like ignore the other ones, guess how much that business tax return is going to cost you, because they got to spend hours sifting through and asking you questions versus just knowing this is the only bank account for the business, is all I have to look at. It's really clear as crystal with stuff that's going in and out cash flow wise. So it's like that's where you end up paying for it, is at the end of the year, because accountants just have to take more time, right?
I love hearing when clients have their own separate bank account for their business entity, because at that point you can just download all the activity for that particular year into Excel and provide me with PDF statements, and from there we can sort through the transactions and we can produce a P&L that we can then continue to file through Schedule C, or file with your entity's tax return.
Item number 5 is you need to set up a record-keeping system for your business. So cash is going to be coming in and out of the business. You might be invoicing clients. You got to be able to track those invoices. You should be recking your bank statements at least monthly to make sure everything is matching up correctly. If you have employees, you need payroll. So Tony's going to cover a number of these items in this next segment. What do I have to be tracking? What do I not have to be tracking? Now that I have this new business, am I tracking home office, travel, food, and what's the record keeping or the bookkeeping system that you usually advise people to use?
The most common bookkeeping system to work with is QuickBooks. You can link bank accounts. You can link credit cards. Those statements will flow automatically into QuickBooks, and it makes the reconciliation process a lot easier. I have seen Excel spreadsheets, which I don't recommend, but whatever your method is, the record keeping piece is a very integral part of maintaining your business. And that's when you should maybe think about seeking a professional to help you with that reconciliation process, because there's 2 advantages to that. You are allowed to pass that off to someone else that you trust, and you're able to actually go out and run your business and generate more income, So you're not sitting at home on a Saturday night or a Sunday night. You're not there crunching numbers or trying to figure out why you can't reconcile your bank account.
And most people don't want to be doing that. They're there as a real estate agent to sell homes. They don't want to be wrecking their bank accounts each month. A headache. For a nominal amount, you can move that headache off. And if you think about revenue versus the cost, like if I can sell one more house as a real estate agent and I make $3,000 off that sale, that pretty much just paid for all those headaches by pushing that off to an outside record keeper.
Very true. And when you say wrecking accounts, I have seen some accounts wrecked. So it's, the reconciliation process, although it seems like it could be very simple and easy, at times it could be burdensome to the business owner. Towards the end of the year, when you're looking at what your tax impact is, it's not helpful to you if you're waiting 12 months to then go back and reconcile your bank accounts.
Right.
Because then you put yourself in a position where, you may have made a ton of money throughout the year. It's tax time. It's time to make a payment. You probably should have been making payments quarterly throughout the year. And now you could potentially be facing, penalties for underpayment of tax.
Yeah, and the other big thing with bookkeeping that we see is if you ever want a loan for your business, if you think you're going to go to a bank, if you think you're going to bring in outside investors, anything form of capital, guess what they want to see? They want to see clean financial record. All of a sudden you need a loan unexpectedly and you have to go back and do 3 years worth of wrecking. Like that's the last thing a bank wants to see.
That's very true. You bring up an excellent point. I've been involved in many scenarios where the client's going to get a loan and now all of a sudden it's a mad rush to get 8 months of bookkeeping done. So they can go and present that to the bank and potentially get a loan from the bank.
Step number 6 is you have to determine if you need any type of business insurance based on the business that you're operating. If you have employees, if you have people coming into your home into a home office setting, or you have your own office, are the correct insurances in place? Let's listen to what Tony had to say about this.
There's a couple different, not only business insurance, there's business liability insurance that I would recommend anyone getting, especially if you are a contractor or you're working in someone's residence and there's potential that a hammer could slip out of your hand and you end up damaging something in their home. There's also another important insurance that you need to make sure that you're covering yourself with, and that's workers' comp insurance. Each state is different depending on what state you're in, what their requirements are for workers' comp. Some states say as long as you have one employee, part-time, full-time, you need workers' comp insurance. If you're employing any family members, you need workers' comp insurance. Some states are 3 full-time employees. It really depends. You need to check with your state laws on workers' comp to determine if you need coverage.
Thank you everyone for watching today. If you have any questions, please feel free to reach out to us at moneysmartboard.com. Thank you.